The Liquidity Engine, fast invoice factoring and AI-driven cash flow in 2026. In the hyper-accelerated business environment of 2026, fast invoice factoring has transitioned from a last resort financing option into a strategic, cash flow accelerator for small and medium enterprises, SMEs, across the United States. As traditional bank loans become more stringent, the ability to convert outstanding accounts receivable into immediate working capital has become the lifeblood of industries ranging from logistics and staffing to SaaS and manufacturing. The hallmark of 2026 is the rise of agentic factoring platforms, which utilize real-time API integrations with accounting software like QuickBooks, Xero, and Oracle NetSuite to provide credit approvals in milliseconds. Instead of waiting 30, 60, or 90 days for a client to pay, businesses can now receive up to 95% of their invoice value within hours of issuance. High CPM keywords such as recourse versus non-recourse factoring 2026, spot factoring for freight and logistics, and AI-driven credit risk assessment attract premium advertisements from Tier 1 Fintech giants, commercial insurance providers, and B2B payment processors, making this a pinnacle niche for high-earning financial content creators. A major structural evolution in early 2026 is the integration of smart contract receivables on private blockchain networks. This technology eliminates double factoring, fraud, and ensures that once an invoice is verified by the debtor, the funds are released instantly via stablecoin or FedNow instant payment rails. For American business owners, this means T+0 settlement, effectively ending the era of the check is in the mail. However, to remain compliant with YouTube's financial and safety policies, it is mandatory to clarify the costs involved. While fast is the selling point, creators must emphasize that factoring is a form of asset purchase, not a loan, and the factor rate, typically 1% to 5% per month, can be significantly higher than traditional annual percentage rates, APR. Promoting factoring as free money or hiding the potential chargeback risks in recourse factoring is a direct violation of transparency standards and can lead to channel demonetization. In 2026, the industry is also heavily focused on embedded factoring, where the option to factor an invoice is built directly into the Send button of digital invoicing tools. The 2026 model for selecting a factoring partner focuses on transparency and zero hidden fee structures. Modern platforms are moving away from complex, junk fees, like lockbox or ACH fees in favor of a single, all-inclusive discount rate. For creators, this niche offers immense storytelling potential, from real-life cash flow case studies to how to negotiate factor rates guides. By providing evidence-based insights into UCC1 filings, Uniform Commercial Code, and the latest Small Business Administration (SBA) guidelines on alternative financing, we empower entrepreneurs to scale their operations without taking on restrictive debt. Furthermore, the 2026 market has seen a surge in revenue-based factoring for digital agencies, where the credit limit is tied to recurring contract values rather than just one-off invoices. Ultimately, the 2026 fast invoice factoring landscape in the United States represents the perfect marriage of algorithmic speed and financial flexibility, ensuring that every business has a reliable, high-speed path to liquidity in an increasingly competitive global market.